To the story now, and the economy has undoubtedly had a rough year. From being at the edge of a ratings downgrade to shrinking GDP, economic outlook looks bleak. For more than on this, I'm joined in studio by Samge Mhlongo, the founder of TNC Wealth Partners. So Samge, thank you for coming through. I brought you here because you and I need to talk about how the macro affects the micro. Around December, we focus a lot on the micro at the household level, how to spend, how not to spend, save, pay off your debts, do these things. But all of this is happening in the context of macroeconomics, the bigger picture. When you look at that, what does it tell you about the waters that we're headed into in 2020?
Exactly. Thanks, Tulasizwe. I think when I challenged you over the phone about this interview, I challenged the fact that we tend to look at December financial behavior in December. And in January, I'm sure I'm going to get a call asking me how to beat January blues, which you should have started thinking about in October. So what the macro environment is telling us at the moment is that, we're growing at about 0.1% in terms of our economy. We've got low inflation numbers, about 4.1% came out for October month. And that's not a good sign. It's actually signaling that our economy is in trouble. And although we're sitting at relatively low interest rates, about 10% prime, we shouldn't see that as an opportunity for us to spend more or be comfortable at the levels we're at. In fact, that should tell us we should use this opportunity to try and pay off as much debt as possible, because 86% of economists surveyed by Bloomberg last week said that they expect South Africa to be downgraded by Moody's in 2020.
Sure.
Now, we know that if we get that downgrade, we kicked off the Citibank World Bond Index. Those global investors that can't hold bonds that are not on the Citibank World Bond Index will have to sell off the South African bonds, and three things will happen, or will be affected rather: our currency, inflation, and linked to that, obviously, interest rates. So taking a 3 to 6 month view on those three elements is what households should be doing in terms of how protected or shielded are they, or what their ability to take knocks or adverse changes in those three elements they have.
So in essence, we should be planning for the worst case scenario. Moody's is the last of the three major ratings agencies that still has us in investment grade, be it by a thread, really. You are saying that they are likely, given what's been happening with the other investment ratings agencies, to actually downgrade us as well. So how do we, at the household level, then prepare for that?
So just to clarify, I'm not saying 86% of economists surveyed are saying that we're likely to be downgraded. Now, there are two schools of thought when it comes to this, right? A number of economists are saying that the market has already priced this in, because remember that the market doesn't react, but they're proactive in terms of the decisions they make, in terms of investing, in terms of looking at alternatives. So a number of people are saying, look, looking at how the rand didn't really depreciate significantly when we had low inflation numbers come out, should tell you that the market is anyway expecting low growth numbers from South Africa. The market is anyway, if 86% are confirming that will be downgraded, it's pretty likely that they've taken that into account. So some people are saying that actually nothing will happen to our currency or inflation numbers should we indeed be downgraded, because the market has already priced that in. And the levels rand to US dollar that we're seeing has already taken this into account. Others are saying that, well, maybe they haven't priced it in, and in that case, you want to be settling your debt off as soon as possible, because should the currency depreciate, inflation goes up because it's relatively more expensive for us to import, and then obviously you'll need that interest rate to be ticking up to manage that inflation. Other schools of thought are saying nothing's going to happen. We can just take a forward look to say, okay, what opportunities could exist when we see that?
Take me there. Opportunities. Talk to me about, if I do come into a bit of money in December right now, given the global scenarios that you paint, what should I be doing with my money this December, Samge?
So cash is king. Cash is definitely king. Do not go on a buying spree, but rather hold out, because you may find that a lot of assets like property and shares, company shares, may now be falling off when we do have that downgrade announcement, should it happen. We know that a lot of people are already starting to divest out of South Africa. A lot of people are selling off their properties. It's a buyer's market. So you actually want to be in a position where you can snap up assets such as property, such as shares, at a discounted amount, because then you'll be putting yourself in good stead for when the economy does recover, for when we are then regraded back to investment grade. So
right.
Those are the considerations.
I think I've got a better idea. I must just let you handle everything. Let's see how that works out. Samge Mhlongo, thank you so much for coming through and giving us the heads up on how to navigate what promises to be really tricky waters in as far as the economy is concerned.